we're going to be speaking with Mr. Ajit from Quess Corp, and we thought we'll get an outlook on what their margins are like, what their segmental growth has been like in the quarter gone by. They've been a key beneficiary of the formalization in the economy as well, robust revenue as well as PAT growth of over FY 18 to 22 is something that we would like to gather. So let's bring on board Mr. Ajit from Quess Corp. And Ajit, it's been a stellar quarter for you. Run us through some of the key highlights and what boosted your top-line performance.
The revenues have grown 48%. EBITDA, as you've seen, is up by about 52%, and PAT even more by about 107% on a year-on-year basis. The real story here is not as much about the top-line growth or the profitability. It's also about margin expansion that we've achieved. Our margins have gone up from 5.60 to 5.74, 14 basis points up, and it'll take us closer to about 6% for the year end as we move to our committed goal of getting to about 8%. So all in all, a good quarter.
Okay. The dominant source of revenue from your P&S segment, tell us, because you know that contributes about 95% of your revenues. How is it that you're seeing this segment shaping up, and will it remain the growth driver for you going forward as well?
P&S is our largest business segment in Quess Corp, our oldest and most evolved business segment too. We are the largest staffing company in India. We have almost about 240,000 people across all of Quess, making us, as a private sector employer, among the top 2 or 3 in India today. Our P&S business has grown handsomely this quarter. Revenues grew on a 9-month basis, 17%. To about 2,030 crores. Our EBITDA also increased 25% year on year to about 99 crores. And our margin, importantly, has grown from about 4.6 to about 4.8%. So the lead that we have on competition is growing, and we are strengthening our leadership position. I think it's a function of the vintage that we have in the market, the quality of service operations that we've built, the level of technology that we've embedded into our operations, and lastly, our client account management ability.
Well, Global Tech Solutions and Facility Management has performed very well this quarter. What is the outlook here? Will Facility Management continue to see this smart growth? It's been quite a turnaround.
Let me start first with the Facilities Management business. We've had the integration of the MIS transaction post NCLT approval this quarter. Combined with MIS, we've now become the largest IFM player in India with revenues in excess of about 1,000 crores for this financial year. We have more than 40,000, close to 50,000 employees in that space. We manage about close to 16,000 beds in about 20-odd hospitals. Our revenues have increased 119% on a year-on-year basis to about 738 crores. Our margins have grown from 5.1% to 7.9%, and we think that this, along with people and service business, provides 2 mature anchors for the growth of Quess across the future. Our GTS business also has been healthy. As you would have seen, the technology business is slowly settling down across the world. EBITDA grew 46% year on year to about 88 crores. While margins have remained largely flat at 7%. But we think that the addition of the Tata Business Support Solutions business to this, which is now renamed as Connect, will give us an additional set of services and expand the bouquet of offerings that we have in the technology business.
Well, you have a proven track record in acquiring companies across existing and new verticals. Tell us about some more acquisitions that you may have on the cards.
Well, we just did one this quarter. We were fortunate to connect with Sunil D'Souza, who is the founder and managing director of Greenpeace. Greenpeace is an exceptional company in the landscaping space, one of India's best-known landscaping operators. We think that this investment will bring a much-needed institutional approach to the growing landscape segment in India. In our facility space, as we grow to managing more real estate, we will add this piece as a plug-in to the range of services that we have. It's run by an excellent management team. will contribute about almost 35-40 crores of revenues this year, and an EBITDA of about 4.5 to about 5 crores. Works at a healthy margin of about 12%. So it's margin accretive and EPS accretive to us. All in all, a terrific acquisition.
Analysts are believing that you can continue to grow via the inorganic route. Tell us, what are your growth plans? Will you look to expand into newer geographies as well?
The underlying story of our growth is really the organic growth that we achieved. For example, the largest piece of traction in growth this quarter we saw from our general staffing business. And that is all organic. Where on a 9-month basis, the business has increased 17%. So on an average, you can grow organically about 20% and layer on another 15% inorganically and achieve about 30 to 35% of annualized growth. I think it's a terrific number. This is a 20th acquisition we've done, and we think we've got some more that we will work on in the future. But every acquisition for us has been different in as much as bringing a new line of business that we never had before, or a new geography that we were not present in. So there's clearly the principle of additionality in every acquisition that we do, and that's paying off tremendously.
Okay, Ajit, let you go on that note. Thanks much for highlighting what the Q3 performance has been like and what to expect from you going forward. That's the word coming in from the Quess Corp management.